So I've been trawling again on the Trading 212 app, and I've realized that they have a brand new feature. So normally when you go to your portfolio, you have the tab investments here and also pies. You can currently see I don't have any pies. However, there is a menu that says invest automatically with ready-made pies. Now, I don't know how long this feature has been around, but personally, I haven't been looking into pies for a very long time. So in this video, I'm actually going to go through Trading 212's ready-made pies and see if they are a good alternatives to the already fabulous ETF selection that we have as investors. If you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, then all you have to do is click the link in the description down below. Alternatively, if you've signed up to the app less than 10 days ago and you didn't receive a free share, then all you have to do is click the 3 horizontal line menu button right at the bottom right corner. Scroll down until you see the menu use promo code, and then use my personal code JUBAIR and you should receive a free fractional share. Terms and conditions of course do apply. So Trading 212 is kind of famous for its pies. It has a huge selection of user generated pies, and of course you can build your own customized pie. Now if you don't know what a pie is, essentially pies are a customized selection of different stocks or ETFs. For example, if I wanted to build my own pie that tracks the United States of America, but I didn't want to invest into the S&P 500 because let's say I didn't like Coca-Cola, for example, I can invest in every other company apart from Coca-Cola, and within this pie it makes it easy to rebalance. If I wanted to, for whatever reason, have a higher allocation to Nvidia or Google, I can do that, and reduce my exposure to Apple, whatever, I can do that within a pie. Of course, with an ETF like the S&P 500, you get what you get, you can't change around. So pies have been incredibly popular and they are an exclusive feature of Trading 212. However, recently, large asset managers such as BlackRock have been creating their own pies on Trading 212. So let's just go and check that out. So we can click here, choose a ready-made pie. So when you go into this menu, there are a few things that Trading 212 makes you read before you can actually go in and pick those pies. So let's just go through these. Ready-made pies offer solely data on allocations and should not be regarded as investment advice. Of course, unlike an ETF, anyone can really make a pie. You know, it just takes someone to mix 2 companies together and make a pie, and you know, the projections that are based on this data could tell you that you could make 10% per year, but as we know, that's exactly not how the stock market works. And of course, there are a few more warnings about how, you know, you should not take this as investment advice. You should review what holdings each pie has so that you understand what it is that you're actually investing into, and things like these pies will not rebalance automatically. It is up to you to rebalance, and if you don't really know much about rebalancing, then this is probably not the right thing for you. Again, this is not a portfolio managed service like my previous video. This is not something that is a ready-made ISO or anything like that, and they're just trying to make it very clear that this is definitely not investment advice. We'll see later on how some pies can look amazing at first glance, but they don't necessarily give you a silver bullet into the stock market. Here's some other stuff that you really should read into before actually consenting and getting into the pies library. Anyway, I'm going to press understand because I actually have read through all of this. So now Trading 212 has separated their pies into 2 main sections: model pies, which are from big companies such as BlackRock and WisdomTree, and we'll go into that for a bit. But what I want to show you is, if you're new to pies, usually there were only community pies, as you can see here, a lot of different pies. You can see each pie has a view count, so this one has 26,000 views. Now this pie, for example, I'm not giving you any investment advice. This one's called the diversified dividends, and a lot of pies are based on dividends. I think they were all inspired by the very famous almost daily dividends pie. If you actually want me to make a dedicated video about the almost daily dividends pie, comment down below because I actually know the creator and I'm sure I could get his input into that video too. But anyway, you can see users can create their own pies and then make them public, and others can just copy that pie. They can just copy it and make their own rendition of the pie, or just copy it for what it is. So this, for example, has 35 companies, all dividend payers. So this pie aims to create a diversified and stable company selection that ensures a balanced and secure investment portfolio. Again, users are creating this. There's no such guarantee that it is secure because all investments carry their own risks. You can see 35 companies from BP, GSK, IBM. There is some sort of diversification in the fact that, you know, they are all over the world and all over different sectors. However, that being said, they're still dividend companies, and you know, dividends can be cut cut at any point. So there will be some manual input from the pie creator to let you know that the pie has changed. And the pie changes, as far as I know, are not automatic to the pie copier, although I could be wrong with that. But anyway, there are so many different themes of pies, for example, AI cybersecurity, grocery giants, long-term growth, and so on and so forth. There's another UK dividend pie. Dividends are very, very popular right now. But anyway, the core focus of this video is in model pies, which is the new feature of Trading 212. You can see there are, for now, 5 model pies. The first one is the BlackRock core, of course, from BlackRock. If you didn't know already, iShares is owned by BlackRock. So, you know, the iShares core S&P 500, for example, that's all owned by the BlackRock group. So you can see with these model pies, there is a lot of information. And of course, everything is done very professionally and information is available properly. The overview of this pie, the BlackRock core, is a globally diversified model that comprises of iShares ETFs. And then we can see based on the performance figures that have been given, of course, we know that this pie has not been around for 5 years, but we can see annualized returns here. 5 years, you can see 4.97%, 1 year, 1.8%, 10 years, 10.26%, and so on and so forth. You can see in the composition overview that this isn't all in equities. In fact, 48% is in bonds, which is really, really high. Only 49% is in equities, so less than half, and 3% in commodities. We can view the full composition here. And essentially, this pie consists of 23 ETFs, which in my opinion could be very overcomplicating the ETFs. You know, for me personally, I would just get one fund that tracks the entire world, makes it simple for me. But of course, these pies give you extra customization on how you want to invest as an individual investor. And there are 23 pies here. So the iShares MSCI USA ESG Enhanced, iShares Core S&P 500, you can actually click into them and it will bring up that individual holding. You can invest into them, you know, manually if you wanted to, and find out what is in them. For example, this is the S&P 500 hedged accumulating version, and this is in Great British Pounds. I personally use the hedged distributing version, and for the purpose of this pie, I'm sure they chose accumulating. Anyway, if you don't already know, the S&P 500 is basically the top 500 companies in the United States of America. You can check them here. But anyway, 23 slices, a lot of different ETFs here. You can see some treasury bonds here, gilts, so UK bonds, emerging markets funds, Europe excluding UK, Japan ESG, the iShares Europe high yield corporate bonds. So lots of bonds here, and even the FTSE 100, physical gold. So you're really, really highly diversified against pretty much everywhere. One thing to note is that this pie is powered and updated by the data that BlackRock provides. So there is some sort of partnership between BlackRock and Trading 212, it seems. And so this pie, compared to some of the pies that you might find on the community features, might be more regularly updated, and of course probably will be a bit more reliable. Let's just check out what other menu options we have here. We have assertive. I see. So you actually go into the pie here, so the BlackRock core, and there are a few options to choose from. You have conservative, moderate, assertive, and aggressive. So with aggressive, you get 92% in stocks and shares, 4% in commodities, and 4% bonds. So there's actually a lot more customization than I initially thought. And of course, if you wanted to, you can view the full composition here. For the aggressive one, of course, because it's mostly in equities, you have a lot of different ETFs. Again, 16 ETFs, which is a lot of ETFs. The iShares S&P 500 hedged, the MSCI US ESG enhanced. Again, the iShares Core S&P 500. I'm not sure why there is an overlap there. Emerging markets ESG, Europe excluding UK, Japan ESG. Again, S&P 500, FTSE 100 North America, physical gold, and some bonds here. So yeah, you are quite diversified even with the most aggressive one. So typically, if you are below 30 or 40 even, you probably would want to go with aggressive, as this will give you the most into stocks and shares, which are the most volatile, but they also have typically the most growth. I'm actually quite impressed with the offerings that we have from these new pies. There's a lot of customization. There's a lot of choice between, you know, how conservative you want to be. With the most conservative one, you do have an allocation of 78% to bonds. So a huge amount in bonds, and this will be more suited for people very close to retirement, if not already retirement age, and they want to have a portfolio with a lower amount of volatility. Again, you can see the past performance based on, you know, the numbers that BlackRock have given. The other great thing to note about this is, even though you have so much in composition, you have 21 different ETFs here. If you were to do them individually, you know, the costs could add up quite a bit. However, with the pie, we can see the total expense ratio. So the amount it's going to cost you in fees to hold this pie is only 0.14% in conservative, 0.17% in moderate, 0.16% in assertive, and only 0.17% in aggressive. I think you would be hard pressed to get all these ETFs in another ETF, or you know, an ETF that tracks all of these different assets and commodities to be cheaper than 0.17%. So I'm actually very impressed with the offerings. Again, I'm saying that the ready-made funds from these companies are offering on Trading 212. So although I said there are 5 pies, you can actually go into each pie and there are a number of options. So the next few are from WisdomTree, and the first one is called the WisdomTree Core. Again, if we go into conservative, we can see the total expense ratio is 0.23%. They also have a beta rating here, beta if you want to say, if you're American or whatever. So what the beta measures is the volatility of basically these pies. So essentially a higher number means more volatility. A beta value of 1 means that the portfolio's value moves exactly with the market, and anything over 1 indicates quite a bit of volatility. We can see that we are in the conservative pie variant now, and WisdomTree Core basically aims for diversification by spreading investments across different asset classes, industries and regions. So with the conservative pie, you're getting 18% equity, so very low in equity, bonds 72% and 10% commodities. You can see the full composition here, 20 slices. You can see all the slices. Just download the app and you can actually go through them yourself. You don't really have to top up anything. But of course, even if you top up your account with just £1, you can get a free share worth up to £100. So you could easily profit right there. One thing I have noticed is that the total expense ratios for these WisdomTree funds is slightly higher than the ones we've seen with the BlackRock group. For example, the conservative variant has 0.23%. With the moderate, you get 0.28%. Beta score stayed the same. And again, in this pie variant, you do get a lot of bonds, 32%, 20% in commodities, and 48% in equities, which is quite low. If you're under 30, you probably wouldn't want to go with this variant. But again, I'm not giving out financial advice. Here we have 20 slices. You can go through all of them individually. It would take way too long for me to go through all of them in this video. But one thing to notice is that even within the WisdomTree Core, you have iShare funds in addition to WisdomTree funds, and you also do have the SBDR S&P 400 here. It's worth noting that some of these ETFs aren't denominated in pounds. So this one, for example, is in euros. However, when you invest into this pie, I am assuming you still pay in pounds. So there might be some small amount of currency conversion going on. So that might actually bring up the total expense ratio. I'm not sure there. So with WisdomTree funds, there's only 3 modes: conservative, moderate, and aggressive, which is fine for me. Having 5 might be a bit too much choice there. So the aggressive is quite expensive as a total expense ratio. It's about double what the BlackRock pies were offering at 0.34%. And the beta, for some reason, is the same. So I'm not sure how much I can rely on this score, because of course, if you have a lot more bonds as you have here, the volatility should be lower. Anyway, in the aggressive fund, you still have only 80% in equities and 20% in commodities. So you can actually see it's only 13 slices here, and most of them seem to be offered by WisdomTree themselves. We have one from Spider and one from iShares. In terms of equities, you do have things like the WisdomTree US Equity Income. And overall, if you do invest into this pie, you know, you do get a lot of diversification. Now, the next pie is the WisdomTree multi-thematic. And for these ones, there are no pie variants. So the information given to us about the WisdomTree multi-thematic is that it is a mixture of multiple themes, including AI, cloud computing, renewable energy, decarbonization, sustainability, semiconductors, and more. And here, your cash is 100% in stocks. You can see total expense ratio pretty high at 0.47%. The beta score here is above 1, which shows, of course, very volatile, but very expected with 100% in stocks. Again, it shows equity 100%, and let's view the composition here. So there are 16 slices here. Top one here is the Van Eck Semiconductor Accumulating Fund. And we've seen over the past year that has gone up over 28%, and in the peak even above 30%. Again, a lot of volatility if you are investing with these thematic ETFs. We have blockchain, we have miners, AI, biorevolution, cloud computing, new economy, real estate, renewable energy, battery solutions, mining and transistors, sustainable food, recycling, S&P 500 luxury, emerging markets consumer here, and also a weird one here, iShares aging population, which is actually up 12% over the past year. So one thing I haven't gone through is when you go into the composition of the pie, you do see this number here, which says 5.52%. And essentially that is the average annual return, something I personally would say to actually take with a grain of salt. This is basically just the pie's average 5-year annualized return, especially when you get into user created pies. This figure can often be ridiculously high because of course there isn't that much data to actually base those projections on. So I wouldn't think investing into this would give me 5% every single year and then compare it with a bank account, because of course the stock market is very volatile. And of course 5% in the stock market might not be high, and you could possibly achieve more, but you could also achieve negative years in the stock market. So it's very important to actually pay attention to that. So the next one is called the WisdomTree Tech, and this gives you heavy exposure to 6 technology focused themes, which include artificial intelligence, biotech, cloud computing, cybersecurity, blockchain, and semiconductors. So it's very thematic and not much diversification in terms of sectors. It's all going to be technology there. So again, 100% in equities. We can see 7 slices. They are in these ETFs here: WisdomTree Blockchain, VanEck Semiconductor, Artificial Intelligence, Biorevolution, New Economy, Cloud Computing, Cybersecurity. Now here is an example of why I mentioned this AAR number here. It would be very nice if we could just invest into this pie and receive 13.99% every year. In fact, I'd move all my investments here today because that would be an amazing amount. But unfortunately, it just doesn't work like that. These are based on projections. And of course, we know that the semiconductor industry, AI, and things like that have been the most overperforming sector in the stock market for the past 2 years. So it's not going to always continue like that, unfortunately. And therefore, please don't take this number as a projection value and start making your calculations on how you're going to spend your new Lamborghini. So the next fund we have here is called the WisdomTree Environmental Fund, and this is a pie that actually gives you heavy exposure to 4 environmental themes. These are renewable energy sources, recycling, decarbonization, and battery solutions, as well as sustainable food. And again, 100% of your investments will be in stock, and we can see the total expense ratio pretty high at 0.6% and the beta being only 0.69%. Again, I won't think this is too indicative of the actual volatility, because I think the volatility is going to be very high in 100% stocks in this sort of sector. But anyway, let's check out the full composition here. So first thing to note is that the AAR is minus 6.88. Again, it doesn't mean that if you invest into this pie, you're just going to keep getting negative. You're better off just burning your cash at this point. But this is based on historical figures and projecting through that. And you can immediately see that this sector hasn't been performing too well. But anyway, there are 6 slices. The first one is in uranium mining, and over the past year that's down by over 4%, and that is from the provider URMP, which I've never heard of. There's also one from WREE, which I haven't heard of, and the Sustainable Future of Food Fund, which is also down by over 2% this year, and I'm not sure what provider that is. But in any case, we do have 3 WisdomTree funds, very heavy weighting towards uranium mining, and we can see that has been incredibly volatile over the past few years. Personally, I would very much advise you to go in and do your research before selecting any sort of pie, whether it's created by WisdomTree or by a random user on Trading 212. And make sure to check out some of my other videos, and I'll see you in the next video.